Hello and welcome to Chapter 5 on this QuickBooks adventure with your host, Professor Naragon. How y'all doing? So, we have made it. Chapter 5 deals with the end of the accounting cycle. So we're going to deal with some owner transactions that could occur, and of course, one of the major things that happen at the end of a cycle is adjusting entries. Now, this is the first time you ever heard of an adjusting entry. The basic definition of these guys is that these are entries that are made at the end of the period to adjust certain accounts to the correct business activity that has happened to these. Now, those accounts are usually going to be accounts that provide us a benefit that we are using for multiple periods. Those are the most likely candidates. There's a few liabilities and other items. If you take an introduction to accounting or principles of accounting, you should have already seen adjusting. If you haven't, that's okay. We're going to go through some of these, and I'm going to show you the basic math that happens with them. Now, the first one that we're going to hit into is a bit of prepaid expenses. And this category, of course, has anything that we've actually paid, mostly a policy for usually so many months. Well, we actually have to record the actual benefit that we've received from that one as an expense at the end of a period. Now, there's also another prepaid known as supplies. We'll get in that one with inventory kind of thing, we would take a physical count and then make the same adjustment. But we're going to start off with prepaid insurance. Okay, so with this, we're going to hit our memo. So January 30th hits, and we're going to record the bill from Brosana Insurance Agency for 1 year's insurance premium of $900. Now, we already know that this is a prepaid. Again, because we're buying a policy. So we've prepaid multiple months of insurance. Then it wants us to record the monthly adjustment for prepaid insurance. Okay, so first thing that we need to do is, of course, create our bill. Remember, we received the bill for the insurance. So new bill. And we need to find Brosana. There's Brosana. Brosana, na na na. I got my insurance from Brosana, na na na. I know. Bad jokes. Right? Alright, so let's make sure our date is correct. January 30th. And since we're currently in the year of 2021, it will be 2021. Awesome. We also want to make sure that we'll have our category. Now, when we're dealing with the test drive pretty much only has prepaid expenses. They don't have the insurance one. Okay? Now, we could take more time and actually create that account, but we're going to stick to the prepaid expenses for right now. So, we're going to use prepaid expenses. That is fine. So, now, the reason why it already had a category and amount is that QuickBooks likes to save information. So if we've only done that, it's trying to save us some time and doing the basics. But of course, that's not our case, and we know the amount that we've paid, well, is only $900. Sweet. So, we're going to hit save and close. Now our bill has been in the system. And again, doesn't close out. We'll close it out. Okay, now that we've created our bill, we can actually start making our adjusting entry. Okay, well, the first thing we have to do is know how much that we have to adjust by. Now, here, I'm going to actually create my little T account. Okay, if you never saw a T account or a T chart, basically that's just what it is. It's a nice little T, giant T, and this is going to be for our prepaid. Oh, if I can draw it correctly using the touch screen, and we get close enough. Put 3 dots for the eyes and a funky R. That is a really funky R. Okay, so strange R. Anyways, so there's our prepaid. Now we know that it has already started because it's an asset at a debit of 900. So when we adjust, we already know that's not the amount that we need. We are missing 1 month. So we need to find the credit for 1 month. Since we're only adjusting for a month. So in order to do this, we need to take that original amount that we prepaid. And yes, sometimes this happens. So about 900. And then we're going to divide it by the time period. Since we're in months and we only have a year, this is only a year insurance, we have to divide by 12. So let's take out a calculator, take the 900 and divide by 12. So that equals out to $75 per month that we actually use in this insurance policy. Or basically it expires. So we know we're going to have to credit $75 each month. So right now our ending balance in this prepaid insurance would be 900 minus 75 equal to 825. Okay, so that should be our goal, 825. I think I do better doing the touchscreen. Anyway, so that's a balance that we need to keep in track. So when we look at our balance sheet, our trial balance, that should be the total at the end for this prepaid asset account. Again, normally it will be prepaid insurance. But because of test drive, it only has prepaid expense. So, how do we put in this 75? Well, let's go show you. So, here in QuickBooks, you go new, and then in this other, we're going to go journal entry. Okay, journal entry here on 1/30/2021, correct? And it's journal entry number 1. Now, as we already showed, we have our prepaid expense. That's going to be $75. This means we need a debit somewhere of $75. Again, we did a T account, which I strongly encourage you to do for all adjustments. But we know we have to credit. So prepaid expenses going down for the insurance. Well, mostly all prepaid accounts have a sister account, which basically would have the same name, like we do in 2020 2301. So if this was prepaid insurance, and since we're talking about insurance, that means our expense account is going to be insurance. Nice. And they want you to actually put in the description that this is an adjusted entry. So, adjusting. Now, I typically like to put debits first. It's just how we get taught. But if you don't want to do debits and you want to do the credit first, that's fine. Again, this software will take either way. So there's no worries on that. I just typically do it just like y'all have been taught in 2301 or Introduction to Accounting. Okay. So, with that being said, let's make sure that they didn't want anything else. Nope. They're actually pretty good there. So let's go ahead and save and close. Again, don't know why. But we're going to go ahead and go check out that registry. So, chart of accounts. And prepaid expenses. Let's go ahead and view registry. So, there's the persona insurance, there's the bill, and there's the $900, and then there's the adjusted entry. So, again, ending balance is $825, exactly like our T account. Okay. All right. So that means that one's good. All right. So we ran the report, and they want you to go ahead and also run another. So we look at the registry. We're going to now go to reports. Okay. So let's go to reports. It wants to show another one real quick. Let's go. This is going to be called let's see, which report is they looking for? No, it's still in chart of accounts. There's our report. Different kind of report. So run report, and then they want you to go up here. Looks like something's a little bit different here. Okay, so this one's actually a little bit different. Now, in your book, if you're following the book, we have a problem. It tells you to do this report, account list report, and try and find this custom. Let's see, we gotta actually find these dates. Found the dates. So we're gonna have to custom. Let's see if we can get it to work exactly like the book. January 30th. Let's see, run report. I don't need that one. Looks like it's not that one. That is accounts. Okay, so looks like it doesn't have exactly what they're looking for. So it looks like we have a change. So we cannot do this report that it looks like they're looking for. That's fine. Okay. There's many reports that we can use. And one key is your journal. Okay. So if I have my journal, we can actually go look for those dates. So we can actually view, again, the transaction. Looks like they have another transaction going on. Same thing. We can view these. We can click down on them. We want to look at them. If you want to view. And there's not much else because I think they're trying to show you the actual, another way to look at the registry for that account. So I want to see again, if we go to reports, see, there's our journal, general ledger, account list. Yeah, there's nothing that we can do like they want us to do. We can only have the account list going on, which again shows us the amount, 825, but we cannot drill down as further as they want us to. That's just how it goes. No worries, changes do happen. Again, this book is a little bit older. Okay. So, let's see where we're at. We're at 17 minutes on that one. So we're going to go ahead and call it on this drill. And we're going to look at some other adjusting drills in the next video. And pretty much go into, again, just looking at reports. So we're going to try and see if we can mess with the report later on. So we're going to look at depreciation, another big adjustment entry in the next video, and probably some reports like we try to do here, and realize that it has been different than what we have. That's okay. So I will see you for the next part.